You are all set.
I got to mute my phone here. All right. Good morning, everyone. I'm Senator Bob Guida, representing Senate District 2. Today, we'll be holding a meeting of the Senate Ways and Means Committee. I'm going to read through a checklist to ensure that the meeting we're holding is in compliance with the right to know laws. As chair of the Senate Ways and Means Committee, I find that due to the state of emergency declared by the governor as a result of the COVID-19 pandemic, and in accordance with the governor's emergency order number 12, pursuant to Executive Order 2020-04 and its extensions, this public body is authorized to meet electronically. Please note that there is no physical location to observe and listen contemporaneously to this meeting, which was authorized pursuant to the governor's emergency order. In accordance with that emergency order, I'm confirming that we're providing public access to the meeting by telephone, with additional access possible by video and other electronic means. We're using Zoom for this electronic meeting. All members of the committee and selected legislative staff have the ability to communicate contemporaneously in this meeting through this platform, and the public has access to contemporaneously watch and or listen to the meeting on Zoom or YouTube and via phone by following the directions and links provided on the General Court website. We've provided public notice of the necessary information for accessing the meeting in the Senate calendar. We're providing a mechanism for the public to alert the public body during the meeting if there are problems with access. If anyone has a problem, please email remote senate, all one word, at leg.state, state.nh.us. That's remote senate at leg.state.nh.us, or call 603-271-6931. That's 271-6931. In the event the public is not able to access the meeting, it will be adjourned and rescheduled for a later date. Please note that all votes taken during this meeting shall be done by roll call vote. And finally, let's start by taking roll call attendance. When each member states their presence, please also state where they are and if anyone else is in the room with you during this meeting, required under the right to know law. I'll call the roll. Senator D'Alessandro. You're muted.
I'm unmuted.
Here we go.
I'm Senator Lou D'Alessandro. I'm in Manchester in my home, and I'm all alone.
Okay, Senator Daniels.
Senator Gary Daniels, I'm at my home in Milford and I am alone.
Senator Rosenwald.
Good morning, Senator Cindy Rosenwald. I'm at my home in Nashua. My husband is in and out of the room.
Senator Hennessy.
It only looks like the Senate chamber.
Good morning, Erin Hennessy. I am in my car in Gorham and I am alone in the car.
Yeah, and I'm Senator Bob Guida. I'm at home alone in this room with occasional transits by my daughter or grandson. I'd like to welcome all, and please remind our testifiers that we're, other than for the prime sponsor, we're limiting testimony to 3 minutes if possible. That can be supplemented, of course, by questions. And so I will, without further ado, call the prime sponsor of Senate Bill 3, the first bill on the agenda. Senator Bradley.
Senator Guida, I am looking for Senator Bradley under the attendees list here. Oh, there we are. Sonia, could you, my co-host abilities have seemed to have disappeared.
Oh, I got it.
There we go. Senator Bradley's recognized.
Good morning, Mr. Chairman. How are you and members of the committee? I am pleased to be here with you this morning. The purpose of Senate Bill 3 is to clarify New Hampshire law and make our law consistent with federal statute and guidelines from the IRS that the payroll protection plan, whether it's a loan or a grant to businesses in New Hampshire, is not a taxable event under New Hampshire statute. The Payroll Protection Plan, or the PPP, when it was passed by Congress and then reauthorized, was designed to keep the American economy afloat, given the significant uncertainty and the impact of the pandemic. Let's just look at what happened in March and April. when the pandemic hit, our unemployment rate skyrocketed to above 15%. But in large measure, due to the payroll protection plan, our economy has come back. Our unemployment rate is under 4%, and businesses were able to do what the payroll protection plan was designed to accomplish: keep hardworking men and women in New Hampshire on the job and not having to apply for unemployment. Businesses were also able to use the payroll protection plan to pay their interest on their mortgages, so they were able to keep loans performing and pay rent and utilities, all of which helped to prop up the economy in New Hampshire. So who was the payroll protection plan, as it was designed by Congress, intended to benefit? It was only for businesses that were 500 and fewer employees. The largest businesses in New Hampshire and in our country were not eligible. And these businesses that were not eligible are some of the largest business profits taxpayers in terms of the overall receipt of BPT. Senate Bill 3 does not affect them. And given the strong business tax revenues, these larger companies that were never eligible for the PPP would appear to be doing, in aggregate at least, fairly well, as our year-to-date business tax revenue is almost $80 million ahead of plan. But you can't just look at the PPP in terms of helping save businesses and the economy. As I said before, it protected the jobs of thousands of hardworking men and women who still have jobs and are better able to withstand the economic ravages of the pandemic. Congress has made it very clear the payroll protection plan was never intended to be a taxable event, as the IRS code was not amended to make PPP taxable. It was never intended to be that way. Now, the issue in New Hampshire, as I understand it, is that we are tied to the 2018 IRS code and not the 2020 code. So the PPP in New Hampshire, by the technical information release of the Department of Revenue, has been deemed to be taxable, which is the opposite of what's intended in Washington. That DRA technical info release occurred on January 20th of 2021. So here's what I think we should consider. I believe that Senate Bill 3 has to be seen in the light that the feds never intended PPP to be taxable. So Senate Bill 3 is in reality a clarification, one to ensure consistency with federal tax treatment. When we look at the fiscal note, I think the overarching issue is that it was never intended to be taxable. And if that's the case, we should not consider any revenue loss because it was never intended to be a revenue event. However, looking at the fiscal note, I just have to say this. I think Commissioner Stepp does a great job as commissioner. She's certainly one of the best commissioners that we have in New Hampshire. And in fairness, a week ago this morning, Senate Bill 3, as Senator Daniels will remember, was not even introduced. I went to the Rules Committee on Tuesday last week, which would have been February 2nd, to introduce this bill. When I first printed it out, when I had a conversation with the commissioner, I believe it was Thursday, there was no fiscal note, and now there obviously is a fiscal note. So this bill is moving at warp speed, which is necessary given the fact that businesses have to pay their taxes and they're in the process of tax preparation right now. So I think there are a couple of questions about the revenue estimates in the fiscal note, notwithstanding the fact whether it should be taxable or not. There's a range in the fiscal note of $80 to $135 million. However, the first question, has the BET credit properly been accounted for, especially since most of the businesses in question are likely service related with many employees that have a significant BET cost? Remember, as I said before, most of the BPT players in New Hampshire are the largest businesses that never were eligible for PPP. And then secondly, some of the businesses that pay BPT, they also do business in other states. And so in theory and in practice, they would apportion some of that PPP revenue to taxes or circumstances outside of New Hampshire, and has apportionment been accounted for? I think that the committee needs to look at the fiscal note and test those assumptions with regard to those two questions and probably others, because it may well be when we further look at the fiscal note, the impact in terms of revenue would be much less, notwithstanding the fact that it was never intended to be taxable, at least in my opinion. It did keep hardworking people on the job. It did keep the economy afloat. And now to make it a taxable event would undermine that recovery that the PPP helped to ensure we had. So thank you, Mr. Chair. Happy to answer any questions.
Thank you, Senator Bradley. Are there any questions from members of the committee? Senator Rosenwald.
Thank you. Thank you, Mr. Chairman. Thank you, Senator Bradley. I completely agree that taxing the federal assistance has been a really hard burden for businesses during the downturn, and many of them might just be finding out now as they're doing their returns. But DRA has been telling us since the fall, really since probably October, that the main reason our BET and BPT revenues were doing so well versus plan was because New Hampshire was including them in the tax rate. So we've known that this is what has helped mitigate against the revenue decreases the governor had been predicting back in the spring. And I guess my question is, since all five of us on this committee are also on finance, if you have ideas for us on how we might pay for this, especially in light of Senate Bill 13, which would lower the tax rates and is projected to cost $80 million in the next budget. I'm just looking for your thoughts on what we can do without.
So thank you for the question, Senator Rosenwald. I think that the legislation to further meet the goal of reducing the business profits tax to 7.5% and the BET to 0.5% are totally separate from Senate Bill 3. Senate Bill 3 is a clarification of New Hampshire law vis-a-vis what Congress intended for the PPP, to never make it taxable. I think that if I understood you correctly, you agree with me on that. Senate Bill 13 and the tax rates is going to have to be considered as part of the budget picture, and our available revenues, how the economy is doing, much like, we have done in all of the instances that we have, considered lowering business taxes. It's always been in consideration with the overall budget picture. This is different, in my opinion. It was never intended to be a taxable event. The technical information release was published on January 20th. So while there may have been speculation about what might happen, I think businesses in New Hampshire, especially seeing what was happening in Washington, where the code was not amended, where it was never intended to be a taxable event, are now somewhat surprised and concerned that it could be in New Hampshire, but for this clarification that Senate Bill 3 offers. And I think that as you hear from the witnesses today and ask some of the questions that I raised about the BET credit and apportionment, that the fiscal note, notwithstanding whether it should or shouldn't be taxable in New Hampshire, is significantly less than may have been estimated by the department. And in, again, this is going at warp speed, so it's understandable that there are a lot of questions about the fiscal note.
If I could just quickly follow up, Mr. Chairman.
Please.
This is the most complicated fiscal note I've ever seen, but I wonder if you read it the way I do, that the taxes we've collected on the PPP loans in the current fiscal year are not going to be given back. That $80 million cost, or up to $135 million, is in the following fiscal year.
And I think that is a question that other experts
I'm going to
can
have to
better
ask,
answer.
definitely ask Commissioner Stepp, but
I will advise that we have the Commissioner of Revenue, Lindsay Stepp, standing by to testify.
great.
And
Thank you.
if,
Thank you, Senator Bradley.
You bet. And any further questions for Senator Bradley? Senator D'Alessandro, please.
Thank you, Mr. Chairman. Thank you, Senator Bradley. Senator Bradley, I agree with what Senator Rosenbaum said vis-a-vis the fiscal note or the fiscal impact statement. It's as complicated as any I've ever seen, the quick guide. And indeed, I think you have to be a tax expert to figure that one out. And I'm no tax expert, but I want to question you on two things. One, apportionment and the effect of apportionment on the tax. That's number one. And number two, the intent of the federal government was not to use this money to pay taxes, that the money was to use to stimulate the economy. And as a result of this, that could be counterproductive. So address both of those questions, please.
Well, let me go to the second question first about if it is a taxable event, it being counterproductive. I mean, I think we all know that an awful lot of people in New Hampshire are still struggling, and the threat of layoffs and the economic ravages of the pandemic, while things have improved, is still with us and is likely to be with us, for some time until the economy is fully recovered. So the PPP was intended to prop up the economy. It certainly has helped to do that here in New Hampshire, but to now turn around and say, okay, we're going to tax those businesses that did what the federal government, and I think all of us would agree with that. And looking back, there was hardly a vote against the CARES Act in Congress in March, and it passed again, the updated act in December, again with complete bipartisan support. I don't think we want to start undermining the opportunity for recovery. And I think making this taxable would do that. It'd be a not only bad policy, but a bad signal for the future. In terms of apportionment, my understanding of how that works, Senator, is if you're a business that is operating in multiple states, most businesses would apportion part of the loan or the grant that the PPP was to their operations in multiple states, and we should take that into account.
Further question, Mr. Chairman?
Yes, please.
In your statement, the program was only applicable to businesses with 500 or fewer. None of the larger payers would be affected at all by this. Is that correct?
That is correct. And I think that, one of the documents that was supplied to me is, I think it's page 57 or 58 in the Department of Revenue's analysis of business taxes. And it's what I call the V, or other people would call the V. And I think if you look at that, and you'll see that about 600 of the largest payers of the business tax are only 600 companies. Those are, largely speaking, the ones that did not get PPP because they never qualified for it. They were over 500 employees. When the CARES Act was designed, it was designed to help those middle and small businesses, and 500 employees is actually a pretty good sized business, but they are not the ones, generally speaking, that pay the business profits tax in New Hampshire.
Thank you. Thank you, Senator Bradley. Thank you, Mr. Chairman.
Further questions from the committee? Hearing none. Thank you very much, Senator Bradley.
Thank you.
Ava, I'd like to call Commissioner Lindsay Stepp of the DRA next. She should be showing up here shortly if she hasn't already.
Super. Should be all set.
Commissioner, welcome.
Good morning, Mr. Chair. Can you hear me?
Yes.
Okay. Good morning, Mr. Chair, members of the committee. For the record, Lindsay Stepp, Commissioner at the New Hampshire Department of Revenue Administration. Senator, were there any questions you wanted me to address specifically to start, or do you want me to just kind of go through an explanation of what the department has done to date with this legislation?
I think probably if you were to make an explanation, it might clear up some of the questions, and then anything that we have remaining, we can address at that time.
Sure, happy to do so. So the first thing I just want to go over is the taxability of PPP and the difference between what is happening at the federal level and what is currently happening at the state level. So at the federal level, as Senator Bradley mentioned, the Internal Revenue Code was amended at the end of December, signed into law on December 27th. And what that law did was allow businesses that received PPP to not include the forgiven loan amount in gross income. So it's not included in gross income, but they are allowed to take any deductions, any normal business deductions from that forgiven amount. So essentially, federally, there's an additional benefit provided to PPP recipients where, again, they don't include the forgiven amount in gross income, but they can deduct the expenses. As Senator Bradley mentioned, here in New Hampshire, we're tied to the code of December 31st, 2018. So we do not recognize the amendment that was made to the federal code at the end of December. So what we do currently here in New Hampshire is treat forgiven PPP as we would any other grant. And what that means is that the money is included in gross income and the expenses are able to be deducted. So for example, if a business received $100 of PPP, that money would be included in gross income. If they spent that $100 on wages, that money would be deducted. 100 minus 100 is 0. So the tax impact of their of the fact that they received PPP and it was forgiven, the tax impact is 0. The only time for BPT purposes when we're talking about any potential tax impact is when the business received PPP, the loan was forgiven, it becomes a grant, that money goes into gross income. If they did not spend all of what they received in PPP, either they saved some of it or they spent some of it on non-deductible expenses, then there would be an amount that would flow down to taxable income and have the 7.7% BPT rate applied to it. But again, this is how New Hampshire operates in terms of our conformity to the federal code. We update that periodically as we've been doing over the past few years. And we always evaluate the current federal code and what potential impacts it would have if New Hampshire were to roll forward and adopt that code. So again, so long as the expenses from the PPP are spent on deductible items, the net tax impact should be 0 for BPT purposes. I would also note that Senate Bill 3 only addresses PPP. It does not address other grants or other aid that businesses may have received. So this additional benefit of allowing a deduction when the amount was not included in gross income, that additional benefit is only going to be afforded to those businesses that received PPP. It will not be afforded to all businesses who may have received Main Street grants or self grants or any other sort of aid that helps them through this pandemic. Now I just want to talk about the fiscal impact. Senator Rosenwald, Senator D'Alessandro are correct. This is a very complicated fiscal note. It is one of the more complicated ones that we've done. And I want to address some of Senator Bradley's concerns. So first, I'll just mention that we do have data. There is publicly available data from the Small Business Administration with respect to businesses that received PPP loans. However, it is fairly limited, and the most important thing for our purposes is we don't have identification numbers for these businesses. So we unfortunately do not have a way to trace a business's PPP all the way through to what we know their apportionment and their bet credit and other things. We can't flow it all the way through our data. So we have had to make a few assumptions. I will note that the fiscal note starts by using the $525 billion in PPP loans, and then we apportion 0.4% of that to New Hampshire. And this represents the typical amount of taxable business income overall in the United States to the portion that's in New Hampshire. So we have attempted to apportion the total PPP down to that would typically be attributable to New Hampshire. That results in 2.1 billion in loans. So 2.1 billion out of the 525 billion we've apportioned to New Hampshire. I will note that if you look at actual data for PPP loans received by New Hampshire businesses, that number is 2.6 billion. So there is a difference there. We have, again, tried to account for the apportionment by using the total data and apportioning that down using 0.4%. And we have not used just the amount that went to New Hampshire businesses. And that is because, as Senator Bradley mentioned, if we were to use the amount that just went to New Hampshire businesses, that 2.6 billion, we would be potentially overcounting New Hampshire businesses that apportion to other states. And we would potentially be undercounting businesses that apportion to New Hampshire, but they do not have a New Hampshire address. So that's why we didn't use the 2.6 billion that went to New Hampshire businesses and instead tried to apportion the total amount. Next, moving through the fiscal note, again, we've had to make some assumptions, and we had to make some assumptions with respect to how the PPP was spent. In our fiscal note, we assume that all PPP loans were forgiven or will be forgiven. So we assume that that full 2.1 billion is forgiven and therefore should be treated as a grant for New Hampshire purposes currently, and therefore would also be given the preferential treatment at the federal level. In order to come up with our range, we made some assumptions about how much was spent versus how much was saved. We started by using 60% spent on wages, as that was one of the requirements in order for the PPP to be forgiven. That results in 1.08 billion being subject to bet with the current rate of 0.6%. This would equate to 6.5 million of bet revenue under the scenarios. We then tried to account for that bet revenue as a credit against BPT. So based on our data, approximately 43.4% of bet payers also have a BPT liability, and therefore they utilize their bet credit. So we utilize that 43.4% in all of our scenarios. So again, to Senator Bradley's point, we have attempted to take into account the bet credit based on the data that we have, knowing how many businesses have a bet liability and use it to offset BPT. Obviously, you can see from the 43.4%, there are many businesses that pay bet that do not have a BPT liability. And so again, we've tried to account for that by using that percentage. The ranges that we provided from a low of approximately 80 million to a high of 134.9, again, that just assumes some amount of the PPP would flow through to the taxable income line as a result of it not being spent or being spent on non-deductible expenses. So that's a high level overview of how we came up with the fiscal note. Again, it is complicated. Again, the data is incomplete, and we have done our best to make some assumptions. We've also reached out to a number of other states in order to confirm our analysis and our methodology. And I spoke to a number of them on Friday afternoon, and we feel confident that the roughly $100 million that we're estimating is consistent with what other states are anticipating as well, similarly sized states to New Hampshire. I'll stop there because I've covered a lot, and I'm happy to answer any questions.
Are there any questions from members of the committee? Senator Hennessy.
Thank you, Chairman, and thank you, Commissioner Stepp. I really appreciate the detail and the thought that went into calculating this fiscal note. One question I have for you is, do you have any idea when the state will have a better idea of what percentage of our PPP loans have been forgiven?
That is information, that's a great question, Senator Hennessy. That is information that has been asked of the SBA. I know that there is a bit of a backlog of applications for forgiveness at the SBA. However, it's my understanding that there is federal guidance from the IRS that says if you anticipate that your PPP will be forgiven, even if it has not been forgiven to date, that you, for tax purposes, should assume that it is forgiven. And again, if we didn't think that these were all going to be forgiven, then really SB3 wouldn't be necessary. So it's really only when they're forgiven that we have this different treatment between state and federal purposes. And so we have assumed that all of the loans will be forgiven in our analysis. But no promises on when we'll know the exact percent.
Further questions? Senator Rosenwald.
Thank you, Mr. Chairman. Thank you, Commissioner. My question is about the timing of your cost assumptions, why it's not in this fiscal year, but in fiscal year 22.
So
I'm struggling.
Sure, and again, it's complicated. So the timing of this impact is likely to be split between the current year, fiscal year 21, and into fiscal year 22. And it's for a number of reasons. One, it will depend on how we see the revenue impact. So one way would be refund requests. So businesses have paid their New Hampshire taxes, made their estimate payments appropriately under current law, and they've made those estimate payments. And if this change is in place by the time they're filing their March or April tax returns, then on that return, they would ask for a refund. We would process that refund. Alternatively, with respect to returns, taxpayers are able to file their returns with a 7-month, we have a 7-month extension. So we receive many actual returns, the paper documents, in October and November. So there is also the opportunity to have essentially a timely filed return in October and November with that refund request. So if we're going to see the impact with respect to refunds, that's going to occur in either March and April or October and November. Alternatively, if businesses have not reflected or have not made estimate payments assuming this federal treatment, which again, the state treatment currently is that the amount should be in gross income. There is a chance that we could see reduced return and extension payments in March and April. So not refund requests, but they would owe less in March and April, again, if this legislation is passed in time. And then the third instance would be with reduced estimate payments later this year and into next year. So it really depends on what businesses have done to date with respect to accounting for this difference between the state and federal treatment, and how we see the returns and extension payments come in the coming months. So it is likely to be a split between fiscal year 21 and fiscal year 22.
Follow up?
Thank you. So the fiscal note seems to only talk about fiscal 22. Are you going to be doing a revised fiscal note?
Beginning in fiscal year. I think based on the assumption that they
I think the fiscal note assumes that the timing might not be sufficient in order for businesses to reflect this on their March and April returns. Given that it is the middle of February with returns already having come in and returns due in the next 2 months, the fiscal note assumes that businesses would follow the current state treatment on their returns, and then they would need to potentially file amended returns. And the processing of those amended returns would likely occur in fiscal year 22, as well as those timely filed returns on extension.
Good.
Right, so that is, Senator, that is a good point. In that this is a retroactive tax change. The tax year has closed, and some businesses have already filed their returns. And if this subsequently passes after the close of the tax year, businesses will need to file amended returns in order to account for this change. And so that's kind of what the fiscal note is assuming.
There'll be another anomaly. Thank you.
Correct.
Thank you. That's really helpful.
Senator D'Alessandro.
Thank you, Mr. Chairman. And Lindsay, thank you very much. You've been very, very helpful and very available, and I appreciate that. There's one statement in your narrative, the quick guide, that I think really bears looking at. You say that the New Hampshire treatment under current law mirrors the normal treatment of forgiven loans for federal tax purposes. The federal government has, however, made a policy decision to modify this treatment for forgiveness of PPP loans. Now, where we have conformity to the 2018 code, this change was made after that, right? Correct?
That is correct, Senator, and you are correct. The state code or the federal code of 2018 is the normal treatment for normal tax treatment for forgivable loans. The federal government decided to give an additional benefit with respect to PPP. And you may remember that benefit was an evolution.
Yes.
The first CARES Act had the treatment of PPP such that the forgiven amount was not in gross income, but businesses could not deduct the expenses. There was some confusion in the regulations and some confusion about the federal intent. And that's why on December 27th, an updated version of the Internal Revenue Code was adopted, which allowed for the amounts to not be included in gross income and for the expenses to be deducted. But that was a change from the original intent under the first CARES Act. So there was an evolution there.
Further question, Mr. Chairman?
Please.
So in essence, that modification has had a significant effect on the taxability of this money, and as a result of that, if you weren't in conformity, you're just going back to the 2018 code.
That's correct. That's correct. So the state follows the 2018 code, and the treatment of PPP is consistent with any other forgiven loan or grant. And I will also note that even under the original CARES Act, where the amounts were not in gross income, but they could not be deducted, assuming that the amounts were spent, there was really the bottom line difference between the state and federal codes were zero. We would include the amount, but we would allow the deductions. The original CARES Act did not include the amount, but did not allow the deductions. It's only with this law that was passed on December 20th, that was signed into law on December 27th, that provided this additional benefit and created this difference between state and federal treatment. Also, I would note, it is not uncommon for there to be some differences between the state and federal treatment of certain items. The state, New Hampshire, routinely decouples from certain federal provisions. As you know, Senator, is working through conformity over the years.
Right.
New Hampshire has made the decision to be a static conformity state, not a rolling conformity state.
Right.
So that we can evaluate the impacts of the changes to the federal law.
Right. And just one further point, Mr. Chairman. I think that's a very key point, Lindsay, that you've made. New Hampshire has chosen to be static, and we're lucky we got to the 2018 because we just made that change in the last budget cycle. So we've never accepted rolling conformity.
Correct.
That's a problem.
Right.
Do you believe?
If you believe, would you believe, particularly as it relates to this situation? Thank you, Mr. Chairman. And again, Lindsay, thank you for your excellence and willingness to work with us. I find you to be the perfect example of a good public servant. So thank you.
Thank you, Senator.
Senator Daniels is recognized.
Thank you, Mr. Chairman. Commissioner, businesses that receive PPP loans, were they given a particular time in which they had to use that money?
That is a good question, Senator. Off the top of my head, I don't know the quick answer and I don't want to misspeak, so we can get back to you on that. But I will say, I think we all know that the businesses likely needed the money. And so I'm assuming in many cases, the businesses spent the money in order to keep their doors open. So we can get back to you. My quick look at the fiscal note quick guide does indicate that businesses, in order to eligible for loan forgiveness, if the funds were used for eligible payroll costs, payment on mortgage business expenses, mortgage interest payments, rent or utilities, as Senator Bradley mentioned, either in an 8 or 24-week period after disbursement. So in order for it to be forgiven, they needed to meet those requirements in the 8 and 20 or 24 week, depending on the specific provisions for their loan. I will also mention that our analysis only includes kind of the first round of PPP and does not include this subsequent PPP program that kicked off in the past few weeks. And I know that the provisions around this subsequent program allow for different types of costs and obviously would be an additional fiscal impact that we have not taken into account yet because the data is not available.
Thank you.
Further questions? If not, I have a question for you, Commissioner. In that we'll be doing revenue estimates down the road a piece. Is it possible that the department might be able to develop a graph with the horizontal axis being the quarter of the year in which tax returns or the month in which returns are expected, and the vertical axis would indicate the impact of this legislation on receipts expected? Is that understandable?
I do understand. Yeah, we do have a kind of a graph of the timing of when returns and extensions and estimates are paid, and we can work to make some assumptions to layer the impact of SB 3 on top of that. Again, it will be imprecise, but we can do our best to try to make a connection between the two.
Thank you very much. Any further questions? Hearing none. Thank you, Commissioner.
Thank you, Mr. Chair. Thank you, members of the committee.
The chair at this time would like to call Mr. Bill Ardinger, who is on the attendee list.
Okay.
Hello, can you hear me?
Yes, Bill, we can hear you well. Thank you.
Thank you. Ava, thank you for letting me appear for a hearing in front of the committee. My name is Bill Ardinger. I'm a tax attorney at Rath, Young and Pignatelli. I'm here to testify about two aspects of Senate Bill 3 that have already been addressed in prior testimony. I will try to be brief. First, some disclosures. Our law firm represents, businesses that could be affected by this bill. Rath and Young itself received a PPP loan. Because of our particular tax circumstances, we will not be affected by this bill, but I wanted to disclose that. Finally, I am a registered lobbyist for a couple of clients. They are not interested in this bill because they're larger entities. And so today I'm testifying not in my capacity as a lobbyist for any client, but on my own behalf. My views are just my views. They're not the views of my firm or any client. Thank you for letting me be clear on that. I would like to focus first on an aspect of the testimony that's been provided by earlier speakers on the federal tax treatment of PPP loans. And first, let me say, what I am going to talk about is going to be contrary to something that Commissioner Stepp has just said. I want everyone to know that I think, like the prior speakers, that Commissioner Stepp and her team at DRA it has produced one of the best tax administration teams that I'm familiar with in my 30 plus years of practice of tax law. And so my comments are designed to be collaborative and not critical. First, I want to talk about the fact that the CARES Act and the subsequent Consolidated Appropriation Act federally, the ones that dealt with the federal tax treatment, they did not amend the Internal Revenue Code. They did not amend the Internal Revenue Code. This is quite unique in federal tax law. What happened was, in the CARES Act, which established the PPP program in Section 1102 of that bill, which was ultimately enacted on March 27th, 2020, the PPP program had a special section called, it was Section 1106 little I. It was called Taxability. And it said, for purposes of the Internal Revenue Code of 1986, any amount that would be includable in gross income by reason of PPP forgiveness shall be excluded from gross income. So Congress came along in March of 2020 and said, you know that code that's in effect back in 2018? We're not changing one word of it. But we're saying that when the IRS or anyone else construes it, that it shall not be construed to include in gross income PPP loan forgiveness. That's important because Congress in the CARES Act had other sections where they amended the code. So my collaborative effort with the commissioner's testimony is to point out that where she said the CARES Act amended the 2018 version of the code, I believe that's not accurate. And I believe that difference in view is critically important to your discussion of Senate Bill 3. Let me just go one further point, that after that CARES Act happened, the Internal Revenue Service in May and in November said, hey, by the way, the Congress was quiet on the deductibility of expenses paid for with PPP loan proceeds. So we're going to conclude that they are not deductible. Congress then came forward at the end of December and said that position of the IRS is not right. And in that section of the law, which was in section 276 of the Consolidated Appropriation Act of 2021, even though it was enacted 12/27/20, the federal law that was used to make clear the IRS position was exactly similar to the language in Senate Bill 3. The Senate Bill 3 piggybacks and tracks the language of the federal bill at the end of December that said PPP loan forgiveness is not taxable and PPP expenses are deductible. Again, in that year-end bill, Congress did not amend the terms of the Internal Revenue Code. They passed a law in that act that said when you're interpreting that code, do not tax PPP forgiveness and allow the deduction. And Senate Bill 3 tracks that. Now, why is this important? The commissioner pointed out that we piggyback with static conformity, the code that was the words of the code that were in effect on 12/31/2018. Well, those words have not changed in these regards. What has changed is that Congress says when you're reading those words, PPP forgiveness is not taxable and PPP expenses are deductible. In that case, we have a situation where I believe current law, and we've advised our clients to hold off on this because I think New Hampshire's current BPT law, which piggybacks the code language in effect in 2018, has to follow the congressional interpretation of how that language should be construed. Importantly, the department took a different position in its taxpayer information release issued in January of this year. I understand that my interpretation is different than the department's, but it has important ramifications as you consider the revenue considerations of SB3. If I am right, and the IRC, the Internal Revenue Code, as we piggyback it for PPT, does not allow taxation of PPP forgiveness and must allow deductions of PPP expenses, then SB3 is simply a clarification. And current law does not collect revenues from businesses who are taking the PPP money and using it for what Congress said to use it for, which was keeping employees and not closing. I think that because if that's right, if my position is right, then SB3, its fiscal note should be 0 because it's simply a clarification of current law that, like Congress did, says to the tax administrator, we understand your position, but we want to clarify that that's not the right position. The right position is that New Hampshire's BPT, this is what I think Senate Bill 3 says, is exactly consistent with the federal Congress requirements. However, if the department's position in its TIR is correct, as Commissioner Stepp testified, then passing SB3 would have a fiscal impact. Now, the question of what its fiscal impact is an important one. And you have asked some important questions today, and I won't repeat it. I did want to indicate in response to a couple of points, and then I would be happy to take questions. First, Senator Rosenwald has asked the very important question. When you look at our current business tax revenues against plan, as of the end of January, we are up 78 million. In my view, those revenues, which are collected not with respect to fiscal year 21, obviously, I do not believe that many businesses have filed estimated payments assuming that PPP forgiveness is subject to tax. I think that they have received that loan in 2020. It is not forgiven yet. I do not believe it won't be forgiven until calendar year 21. Therefore, it would be premature to report any of those dollars in your estimates that would go into the actual receipts that are coming in and reflected in the monthly revenue focus, which shows a 78 actual over plan. What does that 78 actual over plan probably come from? It comes from the fact that, as Senator Bradley said, 80% of the BPT, or 400 million of the 520 million, they're paid for by very large businesses, and 600 of them. Very large businesses were not eligible for PPP. And it is highly likely that those large businesses, on an apportioned basis, but nonetheless very important, companies like Microsoft, Amazon, Comcast, the bigger ones that pay the bulk of the BPT, that they have actually been doing better than hoped. And we've seen that in some of our data, like the stock market does well for these publicly traded companies that pay the BPT. Our smaller businesses, however, are struggling. And what SB3 is about is to benefit and protect those smaller businesses. Mr. Chair, I'd like to close by saying, I think that Senate Bill 3 is exactly consistent with federal law treatment by Congress. It uses the same language, and it is designed to say when Congress provided that federal dollar loan to these businesses, they said you shall spend it on keeping workers employed and certain other things to keep the lights open at your business. They did not say save some of that to pay taxes to states. And I believe that SB3 is consistent with current law, and I would urge the committee to support this bill, and I would be happy to answer any questions.
Are there any questions from members of the committee? I have a question, Mr. Ardinger. Bill, it appears there's a fundamental difference of opinion between the commissioner and yourself about the interpretation of congressional action at the end of 2020 with respect to this clarification of taxability. Do we have any sense of how other states are treating this?
Other states are going through the same analysis that you're going through right now. There are going to be very few elected officials who are in touch with the small business trials and tribulation, who are going to be happy about trying to tax this PPP forgiveness as income. People know small businesses are struggling. Many are closing. However, right now they're dealing with the same question that is presented by this difference of view that I'm presenting to you between the view I'm talking about Congress. One question, Mr. Chairman, that you could follow up on, and I am happy to work with the department as always. I love working with that wonderful team at the department. I think it's important to ask the question, did the CARES Act amend the code language that we're relying on from the end of 2018? I believe the answer is absolutely unqualifiedly no. It did not amend that language. What it did is, in a separate act, say when you construe that language, this PPP forgiveness is not taxable. The commissioner in her testimony, and I don't think this was not a focus of her testimony, but I heard said that the CARES Act and the subsequent act amended the Internal Revenue Code. I think if you follow up with the commissioner and her team, they can confirm that it did not amend the Internal Revenue Code.
We will certainly do that.
I think she said modify.
Any further questions?
Just one, if I might, Mr. Chairman.
No doubt, Senator.
Okay, and thank you, Bill, for coming before us. I think your explanation was really right on. And in Roman 1 of the Act of Senate Bill 3, you specifically talk about the enactment on March 3rd, 2020, and the change. Now, has that change again in the second CARES Act been accepted in other venues in other states to modify taxation policy?
Yes, other states have passed and are considering legislation that would exactly follow the federal treatment that is described in that paragraph 1 of Senate Bill 3 that you're focusing on, Senator. And that is changing rapidly. I think it would be I would promise you, sir, that I could get you a list of those states so that you could compare them. I also know that the department is perfectly capable of doing that.
Great. Thank you. Thank you, Mr. Chairman. Thank you, Brother Anger.
Thank you, sir.
Further questions? I have a couple more. Bill, can you talk about the assumptions with respect to BET credit? And then also in a separate question, if you will, the same thing with apportionment, the situation with apportionment.
Yes, Mr. Chair, and my original thought of testifying, I was going to address that, but I already went on too long. If I could answer your question briefly. I believe, and I've reviewed carefully the admittedly complex fiscal note, and I think it is complex. And I think the department's done a good job in a short period of time trying to get the issues on the table. I believe that a very important part of this revenue estimate must be this reality that many of the small businesses who receive PPP loans don't pay any business profits tax, right? What they do is they pay business enterprise tax. These would be service firms like law firms, like accounting firms, like medical practices, and marketing firms, service firms that don't have heavy capital requirements with third-party shareholders. In those cases, Senator, I believe that this bill would have no effect, no revenue effect, because those firms will not pay BPT, even if PPP forgiveness is taxable, because they have BET credits currently and carry forward that will more than offset that. And the department's fiscal note makes an attempt to identify that effect. And the commissioner talked about the 43.4% number that's based on gross data. I think that I would be very interested in working with the department on that because I think that understates the effect. Why? Because that 43.4 is based on a gross analysis of all BPT payers, which include those 600 businesses that definitely are very large. And they don't even qualify for PPP, many of them. And so therefore, what I would think is, I think that number of taxpayers who are in a BET position, not a BPT's position, the number of taxpayers there are larger than the 43.4%. Second, on apportionment, I like the commissioner's explanation of instead of using the 2.5 billion total New Hampshire number, making an adjustment that tried to take into account apportionment. I think that's a good explanation. I think that I need to think about it a little bit more. It was not immediately apparent that that was the goal, but that is about $400 million worth of adjustment. And I think that is probably on target for apportionment. Because remember, Senator, the smaller businesses that might be subject to the BPT and got PPP, they probably are based primarily in New Hampshire. in that pool. And therefore, their apportionment outside would not be substantial. But I think that the department may have provided an explanation about apportionment issues that is justified, and I will follow that up. Finally, I would say that the department has included an assumption that those businesses who received PPP loans under $75,000 should be excluded because they wouldn't file BPT or BET returns and be unlikely to pay BPT. I think that number should be higher. I think that when you start looking at the businesses on the SBA list that received less than 100,000 or less than 150,000 even, they're businesses that are small businesses that are closely held, like veterinary businesses, like doctor's practices, like dental practices. Those businesses tend to pay BET and not BPT, and therefore wouldn't be affected. I think overall, Senator, that when these aspects that other speakers have identified are properly addressed, that the range of impact from BPT arising under this bill, which is currently in the fiscal note at like 80 to 130, will be much lower in my view. And I'd be happy to work with the committee and the department to try and get that analysis tighter.
Thank you very much. Senator Rosenwald.
Thank you, Mr. Chairman, and thank you, Mr. Ardinger. I do have one question. I think I heard you say in your testimony that the DRA's taxpayer guidance did not exclude the PPP loan from taxable income. And if I did hear that, I'm just wondering why you think companies would not have paid estimates based on that guidance.
Excellent question, Senator Rosenwald. Thank you for asking. The TIR that the department issued came out at the end of January of this year. The businesses who were struggling, the smaller businesses that were receiving PPP loans and struggling through the depth of the coronavirus crisis in 2020, assume calendar year taxpayers, they remember, even under the TIR guidance, until those loans are forgiven, you do not report them as income under the TIR guidance. Now, the TIR guidance says when they're forgiven, the DRA thinks that it's subject to inclusion and taxation. That will not happen, the forgiveness, formally and finally, until this calendar year, Senator. And therefore, it would be premature. And our firm has talked to quite a number of accountants and also to our own clients and said it would be premature to report any estimated BPT before you get final information about forgiveness. And then, of course, we've also said we think the TIR, remember, the TIR is simply the views of the department. They're not administrative rules. They haven't gone through GELCAR. They're not binding, those TIRs. They are simply the department's views of law. And therefore, Senator, I believe that the views in that TIR were not consistent with New Hampshire law. And for the reasons I said before. And so therefore, I don't think businesses should pay in. Just like at the federal level, Senator, when the IRS came out with their position in the middle of the year, 2020, leading legislators from the Democrats, Senator Schumer, to the Republicans, Senator Portman, Senator McConnell, said, that's not the right answer, we're going to correct it. And so businesses did not report and pay on that basis because there was a realistic chance that it would be resolved in advance of ultimately the tax being determined, which is when you file your return. Thank you, Senator.
Thank you.
Further questions? Hearing none. Thank you very much, Mr. Arndinger.
Senator, thank you, and Senators, if I could say, I hope everyone continues, and I hope your loved ones have been safe and healthy. And Sonia, it's good to see you again, even though it's over this virtual connection. Thank you all.
All right, Senator. So next we have still a handful of folks signed up to speak. So next on our list, we have former Senator Bob Clegg. He is no longer, oh, there we are. I see him.
If I may interrupt, I don't see Senator Hennessy on the call. She had a prior commitment at 10 o'clock for the record, but she will return as soon as that's done if we're still in session. Senator Clegg is recognized.
Thank you, Senator. Thank you, Senator, and members of the committee. I always enjoy listening to Bill Arndinger, so thanks for taking me well after him. He's always been fun. I'm opposition to the bill. And I've heard people say that this only went to the little guys, but let's remember that there are large businesses in the state of New Hampshire who have a tendency to break up all of their different entities into smaller groups. And if you look at the CARES Act and the PPE expenditures, you'll see that the same people who benefited may have benefited by having 7 locations listed as different LLCs. Now, a lot of people did take advantage of the money during the pandemic to get by. But let's remember that that money was taxpayer dollars, and it wasn't something that came off a money tree someplace. It's our dollars. And too many of those people who took the taxpayer dollars didn't really need it. But since it appeared to be an entitlement, they reached out and accepted the money. Some of those people bought boats, OHRVs, camp on the lakes, and other items for enjoyment because the PP money actually replaced the money they would have used otherwise. It's my opinion that it's wrong to now give them another benefit out of the taxpayer's pocket. I also don't see any relief for those who collected unemployment. Let's remember that a lot of people stayed out of work for fear of the COVID virus, and actually with the $600 additional money, made more money than they would have if they'd gone to work. Where's the break for them? Because now all of a sudden they're going to find that that's taxable. I don't see anything in this bill that says they don't have to pay their tax either. I'd like to say leave the system alone. It works. If you took the money and you used it to pay your employees and your employees made you money, then there's a tax due. Why is it that if you reached your hand into the pocket of the taxpayers, you get forgiveness, but if I reached into my own pocket and kept my own people working, you're not giving me the same break? How about making us equal? You know, the Department of Revenue says equity for all. Well, let's talk about equity for all. Whatever you forgive for someone else, forgive for me and every other taxpayer in the state of New Hampshire. Call for a moratorium on all the taxes, do whatever. But you can't give one side more benefit than everyone else. It's not right and it's not fair. Now, I also have to point out that Mr. Arndinger says that it doesn't say in there, save some of the money to pay taxes. So is he telling us that those of us who work in New Hampshire or live in New Hampshire, but work in Massachusetts, Vermont, or Maine, or have a spouse in Maine that works, that they don't have to pay the income tax to those states if that money that they received was PPP money? I don't think that's what the federal government meant. I think what the federal government said is they're going to forgive it. But I think in the state of New Hampshire, everybody needs to be treated the same. Those who are going out of business weren't paying the BET, the BPT anyways. But those who found a way to make money off the crisis shouldn't now be able to stick their hands in the taxpayer's pocket. I stuck my hand in my pocket, and I expect to be treated the same way as those who stuck their hand in your pocket and benefited. Thank you, Mr. Chairman. I'll take any questions if there are any.
Any questions from the committee? Seeing none, thank you very much.
Thank you, sir.
Okay, Mr. Chair, next we have Dave Juve from the BIA.
Welcome, Dave.
Thank you, Senator Gaida. Thank you, Ava. Mr. Chair, could I ask your permission to have Ava also allow Carl Heafield to join me in testimony?
Certainly.
I would be happy to do that. I just don't see him under attendees. If he is on, maybe via phone, he could virtually raise his hand. Perfect. Be all set.
Good morning. This is Carl. Thank you for letting me in.
Thank you, Mr. Chair, members of the committee. For the record, my name is Dave Juve. I'm a Senior Vice President with the Business and Industry Association. And joining me is Carl Heafield. Carl is a principal with Baker Newman Noyes in Manchester. He also serves as the treasurer for the BIA Association. And he is among a handful of CPAs that BIA staff relies on for input on business tax issues. I also like to give I guess in the spirit of transparency, to let the committee know that the BIA did not apply for the first or second round of PPP loans, as we are a 501c3 and or 501c6, excuse me, and specifically not eligible. With the passage of the new Coronavirus Stimulus Act in December, which extended the ability for 501c6 organizations to apply, the BIA has applied for that loan, although we have not yet received it. I don't want to take up any more time stating information that's already been given, other than to say that the BIA supports this legislation. I would like to turn the remainder of my time over to Carl Heafield so he can provide some additional thoughts and answer questions from the committee. Thank you, Mr. Chair.
Thank you, Dave. Carl, please.
Thank you. There's been a lot discussed already about the fiscal impact. So I really only want to mention two things. One is I believe it's important to understand that because the PPP loans and funds were used by businesses, primarily for payroll, as well as some mortgage interest and utilities, but primarily for payroll. I would say that the state of New Hampshire has benefited from a revenue standpoint because that payroll is subject to the BET. So if businesses had not had access to PPP loan funds and were forced to lay off workers, business enterprise tax revenues would have been lower. But because they received PPP funds and were able to continue to employ their workers through the crisis, those wages that they paid do bring with it BET revenues to the state. So the state has already benefited from those PPP funds, regardless of the BPT tax impact. And I just wanted to point that out for consideration. The other thing I would say is, as a CPA that works with many businesses and we prepare tax returns for many of those businesses, I think it's already been mentioned, but I think it's really critical that this clarification is made very quickly, because many businesses did receive forgiveness in 2020 and now have a tax return coming due in a few weeks. Many businesses need to file by March 15th. And whether they file an extension or a return, they need to understand how these funds will be reported on those tax returns so that they can have the proper amount of tax paid in by March 15th. So I think it's really critical that action be taken quickly on this and clarification be made as soon as possible so that those businesses can plan accordingly. Those were the only 2 points I wanted to make, but happy to try to answer any questions if I can.
Any questions from the committee? If so, I have a question, Carl. What happens if this committee or the legislature doesn't move on this bill expeditiously? Let's just say if it takes the process of going through the legislative process over to the House and on to the governor, how would that impact your clients' tax return processes? Would it cause disarray for the coming year, or how would that work?
Yes, thank you. I believe it would cause confusion because, as we've heard, there are I guess some different interpretations as to whether the 2018 code that the state follows, how this should be treated versus the technical information release that the Department of Revenue has issued in January. And so I think many taxpayers will, if there's no action taken, will follow the Department of Revenue's TIR and report this as income. And then if, after that, this SB3 is adopted and passed, they would have to file amended returns to properly reflect their taxes. So there'll be a lot of disarray because there'll be multiple filings required by businesses to ultimately get in compliance if this is adopted after their tax returns are due in March. So yes, I think there'll be a lot of confusion, a lot of extra work on their part, and extra work on the Department of Revenue's part because they will have to process a lot of amended returns.
Okay, thank you very much. Further questions? Hearing none, thank you for your testimony.
Thank you.
Okay, Mr. Chair, next signed up to speak is Henry Vayu. However, I no longer see him in the attendees list. So if he wants to sign up and is on via phone, feel free to raise his hand. But in the meantime, if you'd like, Mr. Chair, we can move on to the next person signed up to speak, which is Michael Auerbach.
Mr. Auerbach.
You should be all set, Michael. You are muted.
How about now?
There you go. Now we can hear you.
Sorry, kept going back and forth. Thank you very much, Mr. Chairman, through the members. My name is Michael Auerbach. I'm the Executive Director of the New Hampshire Dental Society. The NHDS stands in favor of SB3, clarifying tax treatment of federal Paycheck Protection Program. The NHDS is a professional organization representing nearly 800 member dentists within several hundred dental offices across the state. Dental offices are not just caregivers providing access to oral health care for 1.4 million New Hampshire residents. Most of them are also small private businesses who own or rent office space, cover salaries for associate dentists and dental staff, and pay for supplies and medical waste disposal from limited budgets. Like other small businesses, dental practices suffered immeasurably from the events of last year. Particularly the March-May timeframe when dental practices closed to treat only emergencies in order to preserve the impending limited supply of PPE and encourage the stay-at-home order. The moratorium forced layoffs and higher costs associated with PPE and adherence to infection control protocols. Central to keeping these offices afloat during the pandemic were funds appropriated through the Healthcare Provider Relief Fund and the PPP. Over the last 9 months, dental practices rescheduling patients whose delayed care created an oral health emergency in New Hampshire are also toiling to recover financially from the enormous losses of that 2-month shutdown. However, the road to recovery is still a long one. The NHDS is very grateful to Senator Bradley for taking the initiative to help protect New Hampshire's dental practices by exempting them from paying the state's business profits and business enterprise taxes for federal funds received through the PPP loans. SB3 will help our members save money, support their employees, and continue to move forward from the last year. For the reasons I've just articulated, the NHDS asks that you please vote this bill ought to pass. And as always, the NHDS is happy to provide to you and all members of the General Court any information or resources the dental community has at its disposal. Thank you. I'll take any questions you may have.
Any questions from the committee? Hearing none, thank you very much.
Thank you.
Okay, Mr. Chair, next we have Kevin Kennedy signed up to speak.
Mr. Kennedy, welcome.
Good morning. Thank you, Senator and members of the committee. My name is Kevin Kennedy. I'm a CPA here in New Hampshire. I'm also on the board of trustees for the New Hampshire Society of CPAs, as well as I am co-chair of their Tax and Legislation Committee. The society itself is taking a neutral position on the bill. However, I think it's important to note that we respect the alternate opinions of individual firms or practitioners. I just want to reiterate a couple of things.
Mr. Kennedy, just for the record, you are testifying on behalf of the society.
Yes.
Thank you.
And again, that we're taking a neutral position. We did like to point out, as mentioned by Mr. Heathfield, that we certainly think that practitioners and taxpayers are looking to file returns and are holding off until the final results of this bill are realized. So we certainly want to express our desire to have the legislation bring the bill to a conclusion as quickly as they can manage. We understand that there are wheels that need to be turned, but we did want to express our desire to have it move as quickly as possible. Whatever form the final bill, if it does pass, takes, we hope it is applied uniformly to all years, regardless of when the loan is forgiven. That currently presumably is the situation with the bill as it is currently worded. And I would like to also point out, in terms of what Mr. Ardinger said, if there is some question about IRS conformity in the year, it's unclear how, if the bill is not passed, how this might come up as a problem or an issue later on relative to considerations as to whether or not there's a dispute as to IRS conformity or the New Hampshire TIR. And also possibly in terms of clarity, if the bill is passed, there could be a non-compliance with taxpayers who naturally think that the PPP funds, because they're not taxable for federal purposes, automatically think they're not taxable for state purposes. And potentially there's a compliance issue there. Those are simply points I wanted to make as an individual practitioner. That's all. Thank you very much.
Are there any questions for Mr. Kennedy? Hearing none, thank you very much for your testimony.
Thank you.
Okay, Mr. Chair, next we have Joseph Haas.
Welcome, Mr. Haas. Mr. Haas, are you there?
He appears to be unmuted, so.
Mr. Haas, can you hear us?
He just raised his hand. Mr. Haas, you are unmuted and we have permitted you to speak via webinar, so I'm not sure why we aren't getting any audio.
Mr. Haas, if you can hear us, could you please raise your hand?
So he did virtually raise his hand. We just aren't getting any audio back.
All right. In the interest of time, we have received written testimony. We do have to press on with our schedule. I think if you have any additional testimony beyond that which is written, since our system seems to be working, and the problem lies with your technology, we'd be happy to accept that. But we can't hold up the hearing and postpone this too much longer for a technical issue on your part.
Unfortunately, Mr. Chair, there's still not any audio and I can't move further. He's already unmuted.
All right, at this time then, well, let's move to the next. And if there, and Mr. Haas, you're certainly welcome to try to fix the communications problem. It appears to be on your end. We'll be here through the further testimony and then look to hear you back if we have time.
Okay, next, Mr. Chair, the last person signed up to speak is Henry Vayu. Henry doesn't appear to be under the attendees list, so I don't think he's still on with us. But that is the last person we had signed up to speak. So this would be the appropriate time for anyone else to virtually raise their hands or dial *9.
All right, is there anyone else who has not testified or has testified and would like to testify again on the hearing on Senate Bill 3?
There is a hand raised. It's via a phone number, so there's no name attached. So hopefully they'll be able to announce themselves for the record.
That's required. Okay, who's ever on the phone ending in 3206? Please identify yourself and unmute.
I think you have to dial *6 to unmute yourself.
There we go.
*6, Joe Haas. Good morning.
Good morning, Joe.
I'm on my home computer in my house in Gilmanton, and I did talk with my Senator Jim Gray on Saturday. Let me just get you on here. I'm not that tech savvy. I don't have possibility of video. But anyway,
right, so
I heard you talk earlier. Thank you for receiving my emails. I got two emails that were sent. One was, I'm looking at my calendar.
Mr. Haas, are you testifying in favor or in opposition?
Well, I put down in favor, but after I heard Bob Clegg on the unfairness, that gets back to my email where I cited Article 83 of the New Hampshire Constitution, where you are there for free enterprise, to support free enterprise, free and fair competition in the trades. So the key word is competition, I guess, and maybe on money too. I don't know. I got to research that. But the bottom line on what I put in my email that I'd like for you to look at is the word pretense. It's not in the Article 83, but it's in the definition of one of the other words. That you're there to help out endeavors, people that are working. I used to be a landlord. I went for an SBA loan, and they said, no, you're not a business, you're an investment. But anyways, then I get into Champerty, but I don't want to talk about that today. Your job description is in Article 31 to be there to pass new bills and to hear grievances. This is my grievance through this committee, that would you please process what I gave you in writing to the, I guess, Senate President to be put into some forum like what the former House Speaker did on having a House Grievance Committee. Could you do the same in your part of the general court? Could that be possible? Because Dick Marple, my friend who was a state rep from
Mr. Haas, we're discussing Senate Bill 3.
Yes.
And I'd like you to keep your testimony relevant to that bill, please.
Yes, that is dealing with helping out enterprises. And I want to help out. My enterprise was screwed by the state, the other branch of government, people not playing by the rules, and I would like for you to look into it. I mean, let's have some, like what Bob Clegg said, equalness here, fairness.
So are you, if I may, are you referring to an event that happened to you specifically, or are you speaking to Senate Bill 3?
Well, no, I didn't apply for PPP. I am not involved with that. I just, for every action, there's an equal and opposite reaction. So when you're talking to help out other enterprises, would you please look at my enterprise as being, as I put into my email, the damages that have occurred by state agents. And the last thing I wanted to say was, who am I dealing with here? When I asked James Gray on Saturday. I said, did you get your $200 retainer up front? Like what Bill Dwyer, the former state treasurer, did with all of you? Did Monica send you all the money? It's either
All
by
right,
check or
Mr.
by...
Haas, Mr. Haas, I don't find your testimony relevant to Senate Bill 3.
No, who are you people? Could you please tell me? Are you working on retainer or are you working on towards your compensation?
We're working on Senate Bill 3, and we will now truncate your conversation if you don't restrict your remarks to that. Any further remarks?
No, just please get back to me by email if you could.
I will look into it as chair of the committee.
Well, one last thing. Bill Ardinger, he said something about piggyback. I say piggy bank. What type of piggy banks are you using? Thank you. Goodbye.
Thank you, Mr. Haas. Is there any further testimony?
So, Mr. Chair, that is the last individual we have signed up to speak. So this would be the appropriate time for any additional folks to virtually raise their hands or dial *9 if they're calling in. And I do not see any hands raised, Mr. Chair.
Right. At this time, I'll close the hearing on Senate Bill 3. We obviously will not be executing that bill at this time. Next on our agenda, let me get to it here. Yeah. So what's next on our agenda, Sonia? I can't find the page. I'm technology challenged here.
Senate Bill 103.
Bill 103.
Oh, there it is. Okay. All right. So Senate Bill 103 is next. I recognize the prime sponsor.
Senator Bradley, you should be all set.
Yeah, good morning again, Mr. Chairman and members of the committee. Pleased to be here as the sponsor of Senate Bill 103. I was asked to file this legislation that pertains to disaster-related, emergency-related work that's done by a lot of utilities or telecommunication companies that help each other out in emergencies and try to restore service. And what happens is that these companies have to bring into our state or other state resources, property, personnel, which has previously not had any connection to New Hampshire. It's done to try to get the power back on, get communication services restored, etc. We've seen this happen countless times in storms. And what happens when you have a situation like this, there are issues that come up with licensing, unemployment provisions, tax provisions, both BPT, BET, property taxes, and potentially that slow down and undermine the ability to restore service as quickly as possible. So this bill would waive certain business registration, licensing, and tax requirements to expedite that recovery. So I think I'll stop there, except to say that taxes like gasoline tax, rooms and meals, those taxes would not be exempt from Senate Bill 103. It would be more things that are not related to New Hampshire, like BPT or BET. So thank you, Mr. Chairman.
Are there any questions from members of the committee?
Yeah.
Senator D'Alessandro.
Thank you very much. Thank you, Mr. Chairman. Thank you, Senator Bradley. We've had many emergencies in the past where we've brought in companies to do let's talk specifically about storms, where we've brought in contractors to do electrical work. And have we never dealt with this problem in the past? What brought this up at this point in time?
Yeah, that's a question that could be better answered by others that are going to speak after me. I think obviously, you know, when you have an emergency, whether it's weather related or something like that, people just make it happen But then after the fact, there are consequences for that. And this bill just seeks to streamline those processes and procedures so that after the fact, it's less of a problem, and you can have these kind of reciprocal agreements with other states to make sure that any future emergency response is streamlined as much as possible. That's the purpose, Senator D, of this bill, Senate Bill 103.
Thank you, Senator Bradley. Thank you, Mr. Chairman.
Any further questions? Hearing none, thank you, Senator.
Thank you.
Ava?
Hey, Mr. Chair. Next, we have Owen Smith.
Mr. Smith, you're recognized. Welcome.
Great, welcome. Can you hear me?
We can.
Thank you, Mr. Chair and members of the committee. I appreciate the time for me to express support for Senate Bill 103. My name is Owen Smith, and I'm the state president for AT&T in New Hampshire. And I'd also like to thank Senator Bradley for sponsoring the bill and understanding the role private organizations play in disaster responses. So I think, as everybody knows, AT&T has been providing communication services in all 50 states. So across the country for over 100 years, we've had a lot of history with responding to emergency conditions, disaster relief, that kind of thing. And we feel that it's important, this bill would be effective in our planning in response, and I think requires coordination between the public sector and the private sector government. And after the events of 9/11, the 911 Commission created the FirstNet Authority, and in 2017, AT&T was awarded that contract. And we're in the process of building out a public safety network across the country here in New Hampshire. We've worked with public safety to build that out. It is a network that brings public safety into the 21st century. And we've got many first responders across the state and every state that rely on this FirstNet network, along with our consumer customers on the AT&T network. So also what brought this to the surface is we've just finished the most costly and most active hurricane season with over 30 storms. 12 of those were hurricanes that came to landfall in the United States. FEMA also reported 16 major disasters in 2020. And in fact, New Hampshire over the last 3 years has had 5 major disaster declarations on its own. 3 storm-related in 2018, a storm in 2019, and COVID this year. And we've actually responded to various storms, restoring our network this year on 2 occasions already. So the ability to bring resources into the state from across the country to restore communications quickly and efficiently is vital to government and local community. I think COVID-19 pandemic has underscored the importance and reliability of networks, as many of us here today, as an example, working from home and also schooling from home. So since Hurricane Katrina about 10 years ago, we've sort of done things a little bit differently, more focus on pre-deployment in anticipation of a storm. And our goal during any storm is to make sure that the cellular network that more and more people are relying on stay operational while the electrical power is being restored, which can happen on a fairly regular basis. So about 6 years ago, our network employees came to us, the people that are responsible for deploying and setting up, bringing in assets and people from out of state. And basically let us know that there's a problem, there's roadblocks, there's legal requirements that are really there for normal business operations, and they tend to slow down a company like AT&T bringing employees or assets in. And I think Senator Bradley said it, a lot of us are just doing it, but it really isn't what is in New Hampshire statute. And there's a lot of prep work and back end work as a result of what is required in New Hampshire. So anyway, this is really to streamline the process, get rid of these roadblocks, let us get in, fix the issue, fix the network. We actually went to NCSL, again, 5 years ago. They heard the facts, they recognized the problem, they worked with the business community, and this model legislation, which we're talking about today in New Hampshire, has passed in 32 other states, including Connecticut, Maine, and Vermont. So that's where this has come from, and I appreciate again being able to weigh in here in support, and thank you for acknowledging the importance of this bill to the state. And I'm happy to answer any questions.
Are there any questions from the committee? I have a question, Mr. Smith. In the FN, in the finance, I'm sorry, in the fiscal note, I'm sorry, DRA states that it'd be an indeterminable decrease in revenues to the state. And I'm wondering if you can quantify for the committee what the amount of such revenues might be on an annual basis or on a per emergency basis. Mr. Smith?
Oh, I'm sorry. I'm sorry. I had a hard time hearing you. I don't have those figures, and I know that certainly in states that have a income tax, it's more of an impact. New Hampshire doesn't, and states like Tennessee and Nevada don't, and Florida, and all three of those states have passed similar laws to this. I think this is more about us being able to get a streamlined process, get the requirements in each state the same, and being able to be consistent and providing certainty, because we do business in all 50 states, and that would be a big help. I think it's not as much about revenue lost to the state or AT&T paying it out. It's about the impact to the company in just streamlining the process so we can get in, we can get out. Many of the employees that we bring in are there on a volunteer basis, and it would be new taxes withheld where they work, FICA withholding, multiple W-2 forms that need to be filed, and it's a hassle, and I think that's the biggest issue. So let us focus on the disaster recovery. The company and volunteer employees are not burdened with tax filing, and again, keep in mind that this is only during a declared state of emergency by either the governor or the president, and state and local governments would not incur costs in unnecessary tax filings as well. So I don't think this is about revenue or expenses. It's about streamlining the process, and be consistent in all 50 states would make it much easier for the out-of-state companies.
Thank you very much. Any further questions from the committee? Hearing none. Ava?
Okay, Mr. Chair, at this time, we have no one else signed up to speak. So if folks are interested in speaking to Senate Bill 103, this would be the appropriate time to virtually raise your hand or dial *9. And I see no hands raised, Mr. Chair.
Thank you very much. And we'll close the hearing on Senate Bill 103. And our next hearing is on Senate Bill 99. And since Senator Daniels, you need to leave at 11 o'clock, is that correct?
No, I'm good for now. Thank you.
Okay, then let's go ahead and proceed with Senate Bill 99.
Okay, Senator Rishardi is the prime sponsor. You should be all set, Senator.
Good morning, everyone. Good morning, Chairman Guida and members of the Ways and Means Committee.
Good morning, Senator. And for the record, Senator Hennessy appears to be back with us.
Great, thank you. For the record, I'm Senator Denise Rishardi, and I represent District 9. Thank you for the opportunity to introduce Senate Bill 99. This is only the second bill I've ever had the chance to introduce as a prime sponsor. Watching out for local taxpayers is a top priority for me. Under the Meals and Rooms tax, the state shares revenues with cities and towns. We are supposed to keep 60% for the Treasury and send 40% back to the locals. But year after year, the legislature has broken this promise and kept more than its share of Meals and Rooms revenues. It has become so routine to dip into this local revenue that in 1993, the legislature made another promise to catch up on the lost revenues by increasing the local share by $5 million each year. But the legislature has usually failed to keep this second promise. We have fallen so far behind that even if we increase the local share of Meals and Rooms revenues by $5 million, as the current law provides, the New Hampshire Municipality Association calculates that we would never actually get back to the full 40% we promised. I think local taxpayers have waited far too long for the legislator to live up to the commitments it has made. We need to stop treating local revenues as ours to spend. Dipping into local revenues leaves local taxpayers to make up the difference through higher property taxes. Senate Bill 99 would simply restore the state's revenue sharing promise and send 40% of Meals and Rooms revenues to help local taxpayers. Last year, for example, the Meals and Rooms tax brought in $314 million. We sent just $69 million to our cities, towns, and municipalities. That's just 22%, or just over half of what we have long promised. Had the legislature shared the full 40%, we could have provided an additional $56 million in local property tax relief. Unless we act, local property taxpayers are going to suffer because of lost revenues. Because of COVID-19, Meals and Rooms revenues are down by more than 17% from last year. Though January, the Meals and Rooms taxes generated $190 million. Yes, that's $55 million less than planned. That will mean a big drop in state aid to cities and towns unless we keep the original revenue sharing promise. That means we need to make tough decisions in the state budget. Passing those decisions down to cities and towns is not an option. I know it's going to be a tough budget year, but that's also true for our local budget writers. And frankly, we can't wait for an easy budget year. I may be new, but do any of you remember a budget where legislature had more money than it could spend? I ran for this state Senate promising to always oppose a sales tax or an income tax for New Hampshire. I think that would be wrong for our state, but I also ran on a promise to watch out for local property taxpayers. As we craft the state budget for the next 2 years, we need to not only watch how we spend the people's money, but make sure we are not simply passing along the costs of our decisions to local homeowners and our businesses. Let's keep our promises to our cities and our towns and restore the revenue sharing under the Meals and Rooms tax. This is an important part of building a stronger New Hampshire. I ask that you support Senate Bill 99. Thank you.
Thank you, Senator, for your testimony. Are there any questions from the members of the committee? I do have a question.
Okay.
Senator, would you be amenable to a graduated increase to the full 40% as opposed to a one-time full increase?
I think it's time to restore this. I want to make a very important note to you that the recession in 2009, when we were failing at being able to keep rooms and meals promise, the state, when it came back and flourished, the rooms and meals didn't. So this is very important. This next statement is that in year 2020, the total state aid was $41 million less than in 2009 recession. I think we have to take this into account.
Thank you very much. Questions from other members of the committee? Hearing none, thank you, Senator, for bringing this bill before us.
Thank you.
Okay, Mr. Chair, next we have Rick Sawyer.
Mr. Sawyer, welcome.
Thank you, Mr. Chairman and esteemed members of the committee. Senator Ricciardi mentioned much of what I was about to say, so I'll probably skip and just summarize. But I am here to voice the town of Bedford's full support for the passage of Senate Bill 99. And again, just as reiterate, the state actions in suspending the formula has taken it to a point where the formula is now broken and we can never achieve the 40% mark given the existing $5 million cap. And just to note how this impacts Bedford, in 2020, the impact to the Bedford taxpayer was over $1.1 million or 28 cents on our tax rate. That represented 6.6%. The loss over 10 years, the last 10 years, is $7.4 million, which clearly impacted each taxpayer in our community and our community staffing, infrastructure, and facility goals. So again, thank you for your attention to this important bill. I will note I have written testimony that goes into a little more detail, and I implore you to support passage of this bill. Thank you.
Thank you, Mr. Sawyer. Are there any members of the committee with questions? Hearing none, thank you very much for your testimony.
Okay, Mr. Chair, next we have Becky Benvenuti.
Good morning. Can you hear me okay?
Yes, Becky, we certainly can. Welcome.
Well, thank you. Thank you, Mr. Chair, and good morning, committee members. I too have submitted written testimony, and in the interest of your time, I will try not to repeat what has already been stated this morning. For the record, my name is Becky Benvenuti. I am the Government Finance Advisor for the New Hampshire Municipal Association, and I'm here today to speak in support of SB 99. And I also would like to go on record to thank Senator Ricciardi for sponsoring this legislation. Because the legislature has suspended this catch-up formula that was passed in 1993 and capped the distribution amount for so long, in fact, 10 of the last 12 years, the current distribution amount of just under 22%, as she said, is far below the 40% that is set forth in statute. And in fact, since 2010, the cumulative difference between what would the amount of the actual distribution would have been if the catch-up formula had not been suspended, and what the actual distribution has been is approximately $189 million to New Hampshire towns and cities. But even more astonishing, the cumulative difference between the actual distribution and what the distribution would have been if the intended 40% was shared is approximately $526 million for the same period since 2010. Meals and rooms tax is the largest source of state revenue sharing for towns and cities. And although the total meals and rooms revenue has increased 67% in the past 10 years, going from $204 million to a high of $340 million in 2020, the municipal distribution has increased only 17%, going from $58 million to $68 million. And the current distribution has not increased since 2017. With the impact on the meals and rooms tax revenue due to the pandemic, the timing of this discussion is certainly more difficult, but the problem is much bigger than just what is happening this year. And though the current impact to our economy is much different than the Great Recession, it's important to look back and review the trends of what has happened to the meals and rooms tax municipal distribution, along with the other revenue sharing and state aid. I think, and I am going to repeat this because I think it's very important, what Senator Ricciardi pointed out in 2009, at the municipal sharing and revenue aid was at its highest level, and that was before the impact of the Great Recession. When the state began struggling to balance its own budget following the recession, there was a succession of major cuts and suspensions to municipal state revenue and sharing. That pattern continued over the next 10 to 11 years, even as the economy rebounded and the state began realizing surplus. And as Senator Ricciardi said, the total 2020 municipal revenue sharing and state aid was still $41.9 million below the 2009 level. And that amount was before the pandemic hit. And it included the additional $20 million appropriated as one-time municipal aid that was received in 2020 by towns and cities. I believe this bill represents an opportunity to remedy what has become a customary legislative practice to suspend the state statute through the budget trailer bill each year and cap municipal revenue sharing at previous year's distribution levels. This bill is an opportunity to begin to restore what has been promised to municipalities for decades and what has existed in statute for just as long. It's an opportunity to begin to relieve the consequential property tax burden that has been subtly downshifted to the local level. So for all these reasons, we respectfully request you vote to return the municipal share of the meals and rooms tax revenue to the level that was originally intended as it exists in state statute and pass SB 99. Thank you very much for your time, and I would be happy to answer any questions.
Are there any questions from members of the committee? I have a question, Ms. Benvenuti. Is there any assurance that the return of these funds to the community would be used to relieve property taxes as opposed to further spending on other projects?
That's a very good question. And I think it's probably a twofold answer. Through the past 10 years, as you know, services have been cut and property taxes have gone up. Across the board, looking at not separating out, because I don't have the ability to do that based on what's on the DRA's website. But if you look at the total property tax impact for that same period, property taxes have increased over 32% from 2009 to 2020. So I think the answer to your question is yes. I think it would, in fact, help to reduce that property tax level. And I'm sure, it wouldn't be right without saying that there are municipal services and particularly infrastructure costs that have been put on the back burner that could also be funded, such as providing state aid grants for water and wastewater infrastructure projects.
Okay, thank you. Further questions? Hearing none. Thank you very much.
Thank you.
Okay, Mr. Chair. Next we have, and I apologize if I mispronounced the last name, William Duchatko.
Thank you. My name is William Duchatko. I'm a resident of Bedford, New Hampshire. And for full disclosure, I'm also a town council member of Bedford. However, I present my testimony as an individual and not representing Bedford per se.
Welcome.
And also sent in a written commentary. Rather than rehash what's been so well said by the Senator, Mr. Sawyer and Ms. Benvenuti, I would really like to put my support in favor of the passage of Senate Bill 99, which allows the opportunities for the municipalities throughout the state to provide some tax relief for their residents. And I think we all tend to forget the fact that we're representing a large mass of people with different economic needs and different economic capabilities. It's time for the state to honor its pledges and to pass this money back to the municipalities where they can see fit to handle local needs. Thank you for the opportunity. I appreciate it. I'm happy to answer any questions.
All right, any questions from members of the committee? Hearing none, I would repeat my question to the Municipal Association representative that what assurance do we have that these funds will go to property tax relief for residents as opposed to further spending?
I don't think that in our system and form of government in New Hampshire, where the people in most cases are the legislative body for the municipality, that we can impose any type of guarantees that somebody may not ask for an expansion of services. From a personal perspective, I hope that would not occur, and works very hard at the council level to retain that. But I don't think there's any guarantee anymore. We can ask you to guarantee that there'll be no further expenses at the state level. Thank you.
Thank you very much. Questions from members of the committee? Hearing none, thank you for your testimony.
Thank you, sir.
Next, Mr. Chair, we have Charlene Lovett. Charlene, you are muted.
Well, sorry about that. Thank you, Mr. Chairman. Thank you. I'm Charlene Lovett. I'm the mayor of Claremont. I am here today with City Manager Morris. I don't know if he's able to speak as well at this point in time. Ms. Fox?
Mr. Chair, would you permit that? And I can bring add more.
Certainly.
Thank you so much. So we're both here today in support of SB 99. Revenue sharing as a concept has been very successful, both in the private and government sector when properly applied. Without this lack of revenue as a partner in the goal to have a vibrant economy and state, we've had to make some difficult choices at the local level. So because this money hasn't been forthcoming in the amount originally allocated by this legislation, we've had to choose many times between raising taxes or delaying infrastructure projects. When addressing capital needs could no longer be avoided, municipalities have been forced to seek funding alternatives in the form of long-term bonds or relying on the possibility of grants, all of which have contributed to operational inefficiencies, increased costs, and a higher tax burden. As an example, in the last 10 years alone, Claremont has lost nearly $5 million in revenue sharing. And I'd like to turn it over at this point in time to Mr. Morris, who can give some specifics of how this has negatively impacted Claremont.
Thank you, Mayor Lovett. Senator, I just wanted to give you a little bit of examples of what the city of Claremont has gone through since 2010, when the cost sharing revenues were suspended, or the catch up. The reduction in that, first, the change caused immediate layoffs in 2010 for the city of Claremont, in which the city has yet to recover from. The reduction in funding, combined with the reduced property values from the 2008 recession, also caused the city of Claremont's tax rate to increase significantly, with an average annual tax increase of 5.8% from 2011 to 2015. As Mayor Lovett shared, if the meals and rooms tax had been shared at the 60-40% as promised, the city of Claremont would have received approximately $5 million from 2010 to the present time. These $5 million would have allowed the city of Claremont to maintain staffing levels and offset the large tax increase that occurred, which stifled development in both residential and the commercial sectors. This lack of development has slowed recovery in Claremont and has also affected state business revenues. Another long-term impact to the city of Claremont is that from 2011 to 2020, the city of Claremont used $2.5 million worth of long-term bonds to pay for much-needed road repairs, infrastructure improvements that may have been diverted if the 60-40 split had been honored. In addition to the direct financial impact, the reduction of revenue sharing has had an impact on the city's small staff, which spends a significant amount of time researching and applying for grants in order to fund basic necessities and infrastructure improvements throughout the city. Some of this time could have been better spent serving the citizens of Claremont or working to further economic growth. I know we're all concerned at all levels of government with the revenue shortfalls from COVID-19, but I come before you asking you to look past the short term and analyze the long-term effects that reinstating the 60%, 40% revenue sharing, or at least making a strong effort to move in that direction. By investing in municipalities, you can start the recovery phase of this pandemic. The state of New Hampshire can ensure that municipalities will be able to complete much needed infrastructure upgrades and focus on economic growth and vibrancy, along with reducing tax rates. This will not only benefit the municipalities, but also the state of New Hampshire and the citizens in which we serve. I thank you for your time and letting me share a little bit about what the downshifting has done to the city of Claremont. And I'd like to turn this back over to Mayor Lovett for some closing.
Thank you, Mr. Morris. So in closing, as you can see, there are real reasons to reinstate this revenue sharing. We have a very distinct and concise vision statement, mission statement. We have a master plan. We've had to delay so often over the many years. The projects we know will move our city forward. And if this is reinstated, I can assure you that that money will be going into the much needed projects that have been delayed for too many years, and we can focus on fulfilling the goals and objectives in our master plan. So thank you for listening to our testimony this morning, and I'm happy to answer any questions.
Are there any questions from the members of the committee? Hearing none. Thank you very much for your testimony.
Thank you.
Okay, Mr. Chair, those Charlene and Ed were the last two folks signed up to speak. So at this time, it would be appropriate for anyone else interested to speak to Senate Bill 99 to virtually raise their hand or dial *9 if they're calling in by phone. And at this time, I don't see any hands raised, Mr. Chair.
All right. At this point then, if everyone's still with us, we'll go ahead and move on, close this hearing and move on to open the hearing on Senate Bill 120 at FNA relative to a temporary change to operator compensation under the Meals and Rooms tax. And we'll recognize the prime sponsor.
Thank you, Mr. Chairman. For the record, I'm Senator Cindy Rosenwald from District 13. I represent 6 of 9 wards in Nashua. And I'm very pleased to introduce Senate Bill 128, the Restaurant Relief Act of 2021. We've heard a lot about taxes this morning, but I have to say that of all the businesses struggling during the pandemic, our restaurants have perhaps struggled the most. For the fiscal year to date, from July 1st, meals and rentals tax collections are down 22% versus plan. And this is indicative of a terrible situation for these businesses and the many employees they support, along with the state's general and education funds. Senate Bill 128 will help our struggling restaurant sector. Currently, the business gets to retain 3% of the tax they collect to help them have to file the paperwork. Senate Bill 128 would allow for 1 year, for fiscal year 22 only, they would be able to keep 5% of the tax they collect. If you look at the fiscal note, it's indeterminable. However, discussions with the LBA when we were drafting this lead me to believe that the general and education funds cost would be approximately $4 million for that one fiscal year the bill would be effective. This is because an extra 2% of collection for 1 year is about $5 million. Restaurants account for about 80% of the collection, 75 to 80%. So the cost to the state would be approximately $4 million for the next fiscal year, but it would be direct relief to the restaurants. And there should be no impact to the cities and towns, according to the fiscal note. And that is important to me. I think you're going to hear a request that the lodging industry be included in this temporary relief bill. The hotels are hurting as well. And I don't have a problem with such an amendment, but it would probably add about $1 million cost to the bill. I'm happy to take questions, but I think other people behind me might be better able to answer technical questions. Thank you, Mr. Chairman.
Thank you, Senator Rosenwald. Are there any questions from members of the committee? Hearing none, thank you for introducing your bill.
Thank you.
Mr. Chair, next we have Henry Vayu.
Henry, welcome.
Good morning, Mr. Chairman and members of the committee. For the record, my name is Henry Vayu, and I'm here on behalf of the New Hampshire Lodging and Restaurant Association. We're here to support the legislation. And as Senator Rosenwald mentioned, we'd like to ask the committee to consider expanding the bill to also include the lodging properties. The lodging properties are actually hurting more than the restaurants, and it probably will be a little longer before the lodging properties bounce back. I think once the restrictions are lifted, a lot of the restaurants will be able to come back to 100%. But as far as the lodging side, I think there's an expectation that the business travel and the convention type of business is going to take a little while to bounce back. And so from the lodging side, it's going to be a little bit longer recovery. And they actually represent, I think 20 to 25% of the rooms and meals tax revenue. So adding them won't be, a huge increase. I think Senator Rosenwald mentioned it might add another $1 million, but just here this morning to express support and ask for consideration of, adding the lodging properties, those licensees to the bill.
All right. Are there any questions from members of the committee? Mr. Vayu, Henry, would you include the bed and breakfasts as part of the lodging industry? Or are you speaking specifically for hotels and motels?
Yes, they all those that are licensed by the department, and I believe they must be licensed and remit the tax. So yes, bed and breakfast too. Yes.
Thank you very much. Further questions from members of the committee? Hearing none. Thank you very much.
Mr. Chair, we have no one else signed up to testify, so this would again be the appropriate time for folks to virtually raise their hand or dial *9 if they're calling in via phone. And I do not see any hands raised at this time.
Okay. I would entertain a motion. Oh, first, let's close the hearing on Senate Bill 128 FN. And I'd entertain a motion to go into executive session to discuss the way forward at this point. Muted.
So moved.
Okay.
I'll
moved by
second that,
D'Alessandro.
Mr. Chair.
We're all muted.
All right, moved by Senator D'Alessandro, seconded by Senator Rosenwald. All right. There's only one bill today, I think, that we might consider. And that was the last bill that we heard here. Let me get to my calendar, make sure I don't. Bear with me here as here we go. Okay. I would say Senate Bill 103.
Yeah, I think Senate Bill 103 is
Pretty straightforward.
pretty straightforward, right? I would, if you take a motion, Mr. Chair, I would move,
right.
I would move Senate Bill 103 ought to pass.
But we got to move to go into executive session
Oh,
first.
excuse me, I thought we went.
So moved and seconded. Let's poll the committee. Senator Daniels,
Yes.
Senator Rosenwald,
Yes.
Senator D'Alessandro,
Yes.
Senator Hennessy,
Yes.
Senator Gaida votes yes. We're now in executive session. Okay, Senator D'Alessandro on 103.
I move it ought to pass.
I'll second it.
Moved by D'Alessandro, seconded by Rosenwald. Is there any discussion on Senate Bill 103?
Senator Gaida. I have a question.
Sure.
Sorry, you can't see me now. So from the testimony that I heard, that there needs to be an amendment to this bill, and it's not ready to be exec, in my opinion.
What? I didn't hear that. Where did that come from?
My apologies. Are you talking about the last bill we just heard, the 5%
No.
for?
No. We're talking about
Senate Bill, if I may, Senate Bill 103. That's the nexus provisions for disaster-related emergency relief businesses, folks that come into the state.
Okay. My apologies. I thought you said the last bill we just heard.
No, yeah, my bad. But we're talking about 103. And in this case, the revenue impact, we don't have income tax on wages. And so I think indeterminate by the DRA and their fiscal note, I don't think presents a large threat. I'd like to discuss that with the committee. Any potential reduction in revenues. I think this is more streamlining for the Secretary of State and the presence of those businesses in the state to conduct emergency operations. Is that the sense of the committee?
If I could, Mr. Chair, it's my sense. I mean, this has been happening for years. We've had storms, and we've had other people come in to rally to support us. So I can't see where that presents a problem, and this is to basically codify it so that it can happen under an emergency that's given by the president or given by the governor. I suppose I said, what brought this up at this point in time? Because we've had significant emergencies in the past 10 years. We had the floods, we had that other situation where we had the terrible ice storm where we had to bring in people from all over. I mean, we've been rallying the troops for years. Has there been a particular event that has precipitated this situation?
No, I don't know of any. And again, I'm very happy to move forward with this bill.
I mean, the bill makes sense.
Right.
I don't know. It does make sense.
All right. Any further discussion on Senate Bill 103? All right. Hearing none. Let's poll the committee. The motion is ought to pass. Senator D'Alessandro.
Yes.
Senator Rosenwald.
Yes.
Senator Hennessy.
Yes.
Senator Daniels.
Yes.
And Senator Gaida votes yes. The vote is 5-0. Consent?
I move consent.
Second.
Without opposition. Senator Daniels seconds.
Yeah, right. We're moving with consent under duress.
Duly noted and appreciated. So we'll poll the committees. Senator Rosenwald,
Yes.
Senator Hennessy,
Yes.
Senator D'Alessandro,
Yes.
Senator Daniels,
Yes.
Senator Gaida votes yes on consent. Who wants to take it out? I'll take it out. If
Okay,
it's on
fine,
consent,
fine.
I'll go ahead and take it out. That's fine. Okay. Any other bills? Either today or prior? I don't see any. I do see a day coming where we're going to spend the entire day doing execs on these things. They're pretty complex issues. All right, hearing no further discussion, I'd take a motion to come out of executive session.
So moved.
Moved by D'Alessandro, second by Rosenwald. Poll the committee. Senator D.
Yes.
Senator Hennessy.
Yes.
Senator Rosenwald.
Yes.
Senator Daniels.
Yes.
Senator Gaida votes yes. And I think that will conclude our business for today. Thanks to all of you for helping out. Thanks to those who participated. And thank you, Ava, for, as always, and Sonia, keeping us on the straight and narrow and making it happen easily. Thank you. Good day.
I'll make a motion to adjourn, Mr. Chair.
Moved and second.
Second.
Seconded by Rosenwald. All right, all in favor. Yeah. Senator D'Alessandro.
Yes.
Senator Hennessy.
Yes.
Senator Rosenwald.
Yes.
Senator Daniels.
Yes.
And Senator Gaida votes yes. Thank you all very much. Have a wonderful day.